step into the chair a breath late, 8:54 and change, and the screen is already humming. The market greets me with that flat, unhelpful smile. A trading range open, price pacing between invisible rails like a tiger at the zoo. I mark it. I breathe. This is where patience goes to see if it still exists. Bar 6 knifes down, and I feel the first tug in my gut. Gap closed to bar 2, a flirt with the moving average. It's breakout by the strictest definition, but it's the kind you don't bring home to meet your risk plan. I narrate the confusion to myself. Too high for bulls, too strong for bears. That special kind of equilibrium where everybody is nibbling and no one is chewing. Sideways is still a direction. Then bar 7 arrives like a drumline, big, green, decisive. It rockets above 6, teasing the high of day. I catch myself rooting for continuation, bargaining with the idea that a strong bar promises a second strong bar. The next bar wipes the smile off my face. Bar 8 is the market's raised eyebrow. Expect the first breakout to fail, I remind myself. Expect it to test the average. Expect the range to behave like a range until it stops acting like one. Bars 9 through 11 are a conversation with hope. Bulls buy lows, bears sell highs, and every big bar becomes a disappointment bar in the mirror. By bar 12, I can feel the wedge forming. A second push-up that closes as a bear trend bar with a sting in its tail. The message is coded but clear. That last breath higher might have been the bull's best exhale for a while. Bar 13. The bulls try their old trick. Buy the low of 12. We're pressing the high again. Whatever you do, don't sell the high, I tell myself, and yet I don't chase either. The moving average has been a distant relative for too many bars. Gravity has a way of visiting. Bars 14, 15, 16 measured steps up a staircase that might be missing a landing. A small bar, a stronger one, then another close at the high. The textbook whispers, multiple bull closes above the MA. Consider a small buy. The trader whispers back, wait for the pullback. Probability versus patience, the eternal coin flip. Bar 17 flickers red, a reversal costume over a doji's bones. Not enough. Bars 18 to 21 begin that slow, grinding slide where your conviction gets sanded down to dust. The average comes up to meet price like two old friends pretending they hadn't been ignoring each other all morning. Then the bears get mean. 7 consecutive red trend bars through 24. Bars getting bigger, bodies getting thicker. I can feel longs giving up in clumps. The middle of that early range becomes a magnet. And the magnet doesn't care how I feel about it. By bar 25, the tape takes on that clinical tone. Close on the low, the minimum to continue. Good bears don't need heroics, they need just enough again and again. Bar 26 tries to stand up into the average and gets swatted. The message repeats in a lower octave. Unless buyers show up here, we tour the low of day. They don't. Not really. The midday stretch becomes a procession, 27, 28, 30, 31, pairs of boots on a wooden floor. My job narrows. Protect, observe, don't invent trades that don't exist. A few green interruptions remind me that ranges are nests for reversals, but these are sparrows, not hawks. I keep score the way only a specialist does. Who is winning, who is tired, who is just trying not to lose. Bar 38 deepens the bruise. Bar 41 echoes it. Every small rally is greeted by sellers in sensible shoes. I jot it with the same even tone a surgeon would use calling for a clamp. Later, back from lunch, I catch the market holding above the middle of the range. Consecutive closes above the MA, always in long, the textbook hums again. But the top of a range is where courage and denial look identical. Bar 46 pokes. The bears answer with 47, 48, 49, 50. Measured, methodical. Bar 51, the biggest bear since 24, splits the day like an apple. If there's a low, they want it. At 52, a green bar flashes like a defibrillator. Buyers below the range as expected. I wait for the follow-through. The next bar stares back as a doji at the bottom of the ocean. Bulls are disappointed, bears are patient, and I try not to be either. By the early afternoon, 60, 61, 62, the market feels like a lecture on gravity. Any strength tilts red by the close. A nested wedge down there, maybe. If bulls can't find value below the average, I tell myself, price needs to fall further to find them. It does. Time, the one indicator that never repaints, keeps marching. The tape compresses into dojis as the clock leans toward the final hour. Breakout mode, but from exhaustion, not energy. Then, late, 73, 74, 75, the bulls finally find their full voice. A clean follow-through above 72. I note the trade, then note the clock. It's the end of the day. Flat is a position. Discipline is a trade. Bars 76 through 78 go full cavalry. Bigger trend bars closing at their highs, gaps getting chewed shut, the market reclaiming lost ground like it never intended to leave it behind. It tests old supply, shrugs, and keeps stepping. I can hear the siren song to chase into the close. I remind myself that consistency is 1,000 small no's disguised as wisdom. I finish where I should. Flat, notes tidy, pulse steady. The day didn't owe me clarity, but it offered an education. Ranges pretending to be trends, trends pretending to be ranges. Bears who needed just enough, bulls who had to prove it twice. My job wasn't to predict who won the war. It was to survive the battle with my edge and my account intact. Tomorrow, the bars will speak a new language with the same alphabet. I'll be on time. I'll listen first.